So I want to officially welcome each and every one of us to the day 2 of our beginner masterclass powered by Tentrade. My name is Martins, and I'm going to be your host and facilitator for today's class. So basically, we're going to be looking at two concepts today. The concept of candlestick, which is the language of the market, and support and resistance, so that you can spot potential reversal zones where you're going to be taking actions either for a buy for yourself. For a good number of you, those of you who were not in yesterday class we did more of basics, all right? Just the theory aspect of the market. We were able to look at what Forex is all about, what is traded in the Forex market, who trade Forex, and most especially how you can take advantage of the immense opportunity embedded in the Forex market. And we ended the class with a practical session where we all placed our first ever trade in the market. We were able to execute a buy, instant buy order, instant sell order, and we equally executed pending orders. And I remember I did give assignment yesterday. We should execute sell stop and sell limits. So candlestick anatomy. Okay, so these candles exist in different time frames. Okay, there are different trading periods in the market ranging from 1 minute, 5 minutes, 15 minutes, 30 minutes, all the way to monthly time frames. Okay, so if, for instance, this is a 1 hour time frame, okay, and at the starting of that hour, this candle open here, right? And at the point it traded as high as this. And within the session, we saw the market draw from there and traded as low as this. And before the end of that 1 hour candle, the market retraced, and exactly 59 minutes, it was somewhere around here. Exactly 60 minutes, it closed at this price. So open high, close lower, bearish candle. Bullish candle, opens low, close high. So if this is equally a 1 hour candle, it means that at the starting of that hour, the market opened here, traded as low as this, rated this low and rejected off, traded as high as this, and close to the end of the session, we see retrace and close at this price. All right. So throughout this session, it means that the bulls were in control of this session. For that 1 hour, bulls, the activities of the bulls in the market was more than the activities of sellers. In case, and exactly that was what gave birth to this bullish candle. So basically, when you hear traders say, you may have had opportunity where you see maybe experienced traders talking about they want to analyze the market, analyzing the market. They're only looking at these two candles. Understand? They're looking at group of and trying to summarize the movements or the activities of these two candles in the market to know who is in control of the markets. If bulls are in control, they will be looking to favor or take action in direction of the bulls. If bears are in control, that is where you have more of bearish candles. They are going to be looking for opportunity to join the winning force of the market, which is the bears to sell. All right. So this is what I mean, that this candle exists in different time frame. If you look at this, right, this is candles from the mobile platform. This is the market itself, candles being represented in the market. And these are ring-like command button where you can actually change the time frame to see what the candles are saying at different time frame. So this is 1 minute, 5 minutes, all the way to 1 minute to 1 month. So you have monthly here, weekly here, daily here. That's exactly anyone you put it. If you put it on 1 minute, it's going to take just 60 seconds to one of these candles to form. If it is on daily, it means every 24 hours, a candle is going to form. So one of these candles represents 1 day in the market. If it is on monthly, that's the same thing. So if it's a monthly, it means it's going to take 12 candles to produce 1 calendar full year activity in the market. All right. Now, when it comes to these markets, all right, there are potential reversal zones in the markets. They call it support and resistance. Okay, so the question is, what does market do as support? What does it do as resistance? The market reverses at these 2 points. If you look at this image, it means this market, these were potential reversal zones in the market. This was a resistance at a point because market traded from here to this place, you rejected, get back there, rejected, back up, and come back on this support again, and rejected but couldn't hold. Eventually, market break it to the downside. To get to this support zone, this is where the market rejected back again. Here was a previous support. Now become resistance. Market rejected, and right now we see the market trading in between this support and resistance. Now the point is this: in this market, what we do as support is we buy our support because we expect the market to reverse from support. So we buy our support here, target resistance. We sell from resistance, target support. The reason is this: there is a defined pattern of where the market moves. The market moves from area of support and area of resistance. If we look at what the way the market moved here, it left this support. After it left this support, it traded into resistance, came back to the support again, and went back to the resistance. Coming back here again because this level has tested a lot, it took it out. So that means when a support is broken, it's going to flip towards resistance. If a support level is broken, that support level has become a resistance level. When next market come back on that zone, you're going to look for selling opportunity. All right. Now, in reality, this is how you're going to see it in the market. If you look at the history of this chart, you see that the market was actually going down. This was a bearish market, and the market eventually just traded into this zone, and we see a sharp rally from there. After the markets got to this level, it rallied up from here to this zone. Then something basically may have been responsible for this. But because this is the very first time it's happening, we are not going to pay attention to it. Eventually, markets came back on this zone and repeated the same thing. At this point in time, it's no longer a chance occurrence. It means there's actually something on this zone that is preventing market from trading lower. So you're going to take note of it this time around. When markets come back on it here, like as it is on it currently now, what are we going to be doing? We're going to be looking for reasons to buy. We buy here, target the next resistance. That's basically how we make money. Now, it's important to know that here was an area of support zone, and here is area of resistance. Because if you notice something, you're going to see that after the market rejected this price, it traded into this, and from here it rejected back again to this place. When else it came back to this zone, it rejected it back to this zone again. So you take note of these two zones. This is resistance, and this is support. So if you're buying here, take profit before this zone, and look for sales, target this zone until any of them is violated. It's very important to look at support and resistance as a zone and not as a level or just as a price level in the market. Because an area of resistance or support is not just a price level on the charts, but a range of price where market is actually finding difficult to break through. If you look very well, you see that for this support, this is the range of zone where that market is finding support. And that's why you capture and start looking for reasons to either buy or sell at those zones. Based on if it's a support, look for reasons to buy. If it's a resistance, you look for reasons to sell. And this is where the candles come in. All right. These candles are not just candles, but they are candles that we use to make decisions on the chart. So where you look for these candles are not just anywhere on the charts, but at important zones in the charts. That is an area of support and area of resistance. That's where you want to see these candles print. If they print anywhere on the chart outside these two zones, you're going to disregard them. You look at them as the normal candles on the chart. But if they print in these two zones, you're going to pay attention to them because these are candles that they call them decision candles. They are entry triggers. Okay, so the first one we're looking at here is called hammer. So hammer is a candle that we use to make decision on the chart for a buy. It belongs to the family of candles they call pin bars. So pin bar is actually made up of 4 candles. All right, we have hammer there, you have shooting star, you have hanging man, and inverted hammer. These 4 candles are what makes up the pin bar family. All right, but for hammer, hammer is a decision candle for a buy. So where you want to see hammer is you want to see hammer printing on area of support. So if the market is on a support, let's say this is an area of support zone, all right? And you see market trade into this zone. Let's say we are considering this area as an area of support zone now, okay? This zone. And market traded into this zone. You see bearish markets, and eventually market got to this area of support. Now, what we are going to be looking for here is reasons to buy. And that's where you look for this candle. You want to see this candle print on this zone. All right? If you see this candle print on this zone, is an entry trigger. What this candle is telling you is, as I'm closing, click buy immediately. All right? This candle is so profitable that is going to pay you over 80% of the time. Most especially, the only thing that will make this candle fail at a zone is if this zone, this support zone, is not a high probability support zone. That's exactly what I'm going to be showing us today, how to draw a high probability support and resistance zone. Okay? If this support zone is a high probability zone, and you see this candle prints on a zone like this, you are sure to cash out from this trade. Even if at all the market is not even going to work, like it's going to violate this zone, this market is going to give you move up to at least the height of this candle before anything happens. So this is what I'm saying. If you look at this chart, this is the chart of GBP JPY on the daily time frame. Now, this is another very important point. It's very, very important you look for these candles at very important zones, at serious time frames, like 4 hours, daily, weekly, and monthly. More especially, I use it on 4 hours and daily. That's because higher time frame, the higher the time frame, the higher the probability of the signal. Higher time frame control lower time frame, and signals on higher time frame are always more reliable than that of lower time frame. I'm not saying that they cannot work on lower time frame like 1 hour, 30 minutes, or even below, but you know the chances of it failing is higher on lower time frame. Now, if you look at this chart, this is a chart of GBP JPY on daily time frame, and this is an area of support. When the market traded into this area of support, you see the candle it formed. All right. It formed this rejection candle, the next candle, and now printed 2 pin successive pin bars on the daily. And shortly after that, you saw what the market did. It rallied massively. This is over 450 pips in that direction. If you have the patience to wait for these candles to print as specific zones, those high probability support and resistance zones in the chart, it will pay you almost every time. Okay, so this is called shooting star. Shooting star is the opposite of hammer, but why you use hammer at a support zone, you use shooting star at resistance zone. They are all part of the families of pin bar candles, but this guy, this is a decision candle. Right? So for the pin bar family, you have 2 decision candles, hammer and shooting star. And we have 2 warning candles, which is hanging man and inverted hammer. Okay, so we are considering the decision candles, the candles that these are the entry triggers, they are the candles you need to see on the zone, and you click immediately, you are pulling the trigger to enter the market. So for shooting star, you want to see it print at an area of resistance. So you're looking for shooting star on resistance zones. That's only one place you respect it to see it there. You're pulling the trigger straight away. Okay, so this is shooting star on the AUD USD 4-hour time frame. I see it once it prints here, the market collapsed from that zone, dropping over 250 pips in that direction. Okay, so these candles are not just candles, but they are candles that they produce wonders if you exercise the patience to wait for them to print at the right zone. If you look very well here, you're going to see that there are other zones where the market printed these candles. This is it here. This is it again here. This is it again here. But the question is, why did it not work in these zones? It was only this one that printed here that worked. That is because the efficacy of these candles is the largest extent dependent on where they form. If they form anywhere outside a decision zone, there's high chances it's not going to work. So a lot of people that don't really understand They don't pay attention to zone where these people are, where these candles form. Could be making decision on it here. Here he failed, here he failed. And that's just it. So you must have the patience to wait for these candles to form at the right zone. The next set of candles we're going to be looking at is this candle, the engulfing candles. It's made up of two candles, right? You have the bullish engulfing and bearish engulfing. What we're looking at right now is the bullish engulfing. This candle is made up of two candles, a bearish candle and then the decision candle, which is the bullish candle. It's always the last candle. Where you want to see this candle form is on support zone. If you see it on support zone, it means the market is saying, I'm ready to go. And you left me no other option but to pull the trigger at that point. So we look for this candle as support zones. And once it prints, we are in. So this is a bullish engulfing on the same GBP JPY daily time frame. You see where it formed. And this market did over 850 pips after this candle formed. So this is not just anyone. This is chart examples, okay? So if you have the patience to wait for this at the right zones in the markets, you're going to be able to catch serious pips with just these candles, all right? So after the market dropped from this area of resistance and traded into an area of support, the market took like 2 days to actually trade into that zone. After that, we saw a shift in market structure. The bulls overtook the market. And after this decision candle here, giving us a bullish engulfing candle, the market left this zone and never came back till it did 850 pips plus. Okay. Now, the brother to this is called the bearish engulfing. Bearish engulfing, we want to see bearish engulfing on area of resistance. At a resistance zone, that's where we want to see the market print bearish engulfing. With bearish engulfing, we expect the market to drop. All right. So because market can actually get into an area of resistance, they start consolidating. If market is consolidating such an area, you expect it to be out of the market because after that consolidation, market can actually break that zone. But if after the consolidation, they now gives you engulfing, it means they are giving you, the institutions are already giving you the heads up that we are interested in going down, that this resistance, we are going to honor it. And after this candle, it means you're pulling the trigger right away. Okay, so this is bearish engulfing on AUD USD 4-hour time frame. Market drop over 350 pips. Okay, these are important zones. If you look at the time frame I'm picking, daily 4 hours, it still works very well on higher time frame like the weekly and monthly. So the next set of candles that we use in making decisions at important zones are called morning star. So with morning star, you want to see it form at an area of support. If you see morning star as support, is an entry trigger to go. It means the market is telling you I'm ready to start moving higher from this point. So when you see this candle, it's telling you it's time to buy. Now look at what we're saying here. If you look at this candle, you see that this is more like is a spinning top, and the third candle completely engulfed that of the first candle. And after that, you see the way the market displays to the upside. So these candles are candles that if you spend time to master them, right, you start seeing results in no distant time. So evening star is the last set of candle we want to look at today. All right. So evening star, you want to see it at resistance. So when you mark your resistance zones, that's where you start looking for evening star. And when evening star prints, it means the market is ready to start going down and it's telling you pull the trigger right away. So just like morning star, evening star equally has to have the condition of morning star. But in this regard, we're looking for it as an area of resistance. And that's it. If you look the third candle, you see that it completely engulfed that of the first candle. Started to see the market drop massively to the downside. So guys, if you have any question, you ask with respect to what we have discussed. Otherwise, we go practical to the chart to see how to do these two things, how to look for these candles, most importantly, how to draw these killer support and resistance zones on the charts. So what are the family of pin bars? Okay, I think I've mentioned that already. So the family of pin bars, I've said it, there are 4 of them. You have the hammer candle, the shooting star, hanging man, and inverted candle, inverted hammer rather. They all have the same shape, but the difference is that the name varies based on where they form. If market is coming down like this, right? And you now see a candle like this. This is called hammer, all right? Now, if you see another candle like this on this zone, because this here now is a support zone, okay? If you see another candle like this here, this is a hammer and this is inverted hammer. So this is inverted hammer, IH. And this one is hammer, which is H. Now, if you see a market that is going up like this, a bullish market, a market trade into an area of resistance like this, all right? And you now see the market form a candle like this. All right? This is called a shooting star, SS. And if you see another candle like this on this zone, this is now called hanging man, HM. So if you look at this now is, if you see a shooting star on the resistance cell, if you see hanging man on a resistance, it's not telling you sell, it's telling you wait, right? There are presence of sellers on this zone, but the sell is not yet confirmed. So why this guy is an entry trigger for a sell, this is a warning signal, right? Telling you have to wait, observe this zone first before you sell. Because the market can, after the formation of this candle and continue to the upside, and you're already on a sell, you hit your SL. The same thing happens here. If you come on the support zone, you now see a hammer, it's telling you buy immediately. You see inverted hammer, it's telling you there are presence of bulls here, but the activities of sellers, of bears are still much more than that of the bulls. So you have to wait for confirmation to go up. All right? So they all have the same shape, but the name varies based on the zone where they form. Trust this is very clear now. Done with this theoretical aspects, let's go to the chart and look at how all these things, we look at all these concepts live. All right, so I'm going to use this to explain some things for us. So the very first thing, if you want to identify an area of support or resistance, you're going to be interested in marking the zones. So first thing is you zoom out your chart like this, and you're going to actually mark potential reversal zones in the market where the swing points where market have shown have respected in the past. If you look very well, you see that this market have shown respect on this zone in the past. The market have actually respected this price level. Okay, so you see the market drop from this zone. From here, you see it traded to this zone, move again to here, and of course, came back to this level. After that, return here, this. So these are swing points in the market. And this is what we have right now. So if you look at this, the only thing you need to do is if the market was there, you need to put a line on this zone. You're going to put a line there. I see exactly on this line, when the market traded back, it rejected from this line. All right. So based on the concept I've shown us on the charts, you see that this first reaction has no history in the past. So this is treated as a chance occurrence. All right. Market coming back on this zone and respecting this level to draw is no longer a chance occurrence. This time around, there's something serious that is actually dropping this market from here. So what you are going to do is you open up this zone after you mark the second level. When you open it up and you catch the zone of that where that reaction is happening, you see that this is the height of it. All right. And of course, coming back on this zone, this couldn't get to that height. But there's something that happened here. This is where the rejection of the candle started. You mark this and you go back to the first one and see, okay, if they captured the major zone there. Once you do this, you're going to put a rectangle inside this zone, and that has become your area of resistance. This has become your area of resistance zone, okay? Now, what this is simply saying is that next time market trade into this zone, we're going to be looking to sell here, all right? Now, this is the next time market came to this zone, okay? Market traded back into this zone. And if you open that candle, if you open that zone, let's see if we had a decision to sell. How many of us can recognize the candle that formed there? If you can recognize it, your answer on the chat box, please. What type of decision candle do we have on this zone for the sell? Shooting star, brilliant. It means we are brilliant students we are following. So it was a shooting star that formed there. And after this formation, you see the market dropped. Would have been a massive profit here. So that's basically how you use this to make decision on the charts. Okay, so the assignment here is use this concept, draw an area of support and resistance, more especially on this zone. This is good. Okay, draw the support somewhere around here and look for decision candles for the movement to the upside. Next, we look at this concept. You submit your homework. All right, guys. So ask your question. Otherwise, we call it a day. So without any further questions, guys, thank you for your time. Thank you for coming around. We appreciate your time. So if you know anybody who is struggling to be profitable in the market, just invite them, keep coming around. There are a lot of other trading concepts we're going to be discussing, but this at this basic level, we're just exposing ourselves to the basic knowledge about the market. There are a whole lot of other, advanced stuff we'll be doing together as we progress in this journey. Keep the fire burning and keep growing. The money must be made. See you guys in next class. Peace.